Welcome back. The Bank of Canada is set to make a rate announcement on Wednesday. Most economists are expecting a 50 basis point rate cut this time around. Joining me to talk about it is Veronica Clark. She's an economist at Citi and joins us from New York. Veronica, thank you very much for joining us as well. Are you in the 50 basis point rate camp? And has your call been affected by the weak employment report we saw on Friday here in Canada?
Right. We are expecting a 50 basis point cut on Wednesday. That was my call really after the October meeting when we saw a similarly large 50 basis point cut. I think the guidance then that rates would come down if activity inflation evolve in line with the bank's forecasts. If anything, we've had softer activity than the bank's forecast. So I think it does make sense to go ahead and do another large 50 basis point cut on Wednesday.
Hi. So I appreciate, that you're just looking at Wednesday. But beyond that, with all the weakness in Canada's economy, any idea from Citi as to what the future rate path looks like for 2025 and your view on where our currency goes as a result?
Right. Yeah, I am expecting more large cuts actually still to come. I think on Wednesday, the framing of a 50 basis point cut is going to be, rates no longer need to be at restrictive levels. According to where the bank thinks, possible neutral rate is, we are still restrictive. So taking, rates down by 50 basis points kind of takes you to the top of that neutral rate range. I am then expecting them to cut 50 again in January. That would take you to really the middle of that neutral rate range. And then I am expecting rates get to something like 2.25 by early next year, with risk that you might actually have a period where rates need to be accommodative, because we're really not seeing that expected pickup in activity that the bank needs to see.
What is your, how should Canadians understand wage growth in the country, which decelerated fairly significantly in November, according to Friday's labor force survey from StatsCan? What is that? It's been a while that we've seen such a modest pace of wage growth. What's that telling us about the labor market here in Canada and the broader economy?
Right. We did see a really sharp slowing in wages on Friday, and it was, maybe a bit of a one-off. It was such a sharp slowing in just 1 month. But I think the trend does make sense. We've had a while now where wages were actually running pretty strong, 4 to 5% annualized. But of course, the labor market has very clearly loosened. The unemployment rate, not even just on Friday, but has been rising for a while. Labor demand has really slowed. So it does make sense that wages are slowing. They are still outpacing inflation, but of course wages are a really important part of the inflation story. I think it should be just taken as more confidence that inflation is getting back to something that looks like 2%.
And the employment market at large, the big story was the rate of unemployment jumped all the way up to 6.8%. So we're now looking at almost 7% as a rate of unemployment. It wasn't that long ago that we were sub 5%. A couple of years ago, we were sub 5%. And the dynamic, of course, is that jobs continue to be added to the economy. More than 50,000 jobs were added, but that's not enough to keep pace with the labor force. So how should people understand this labor market?
Right, exactly. I mean, it really is just telling us that demand for workers is not keeping up with people who want jobs, supply of workers. It was only a couple months ago where the participation rate really had been trending lower, and that was why we had seen the unemployment rate stable even for a couple months. But that participation rate is back to where we were in August, but there are more unemployed people. So I think that is just telling us that labor demand is really weakening. We are still adding jobs, so it is a positive sign that you don't see the big outright layoffs yet. But you would worry that that's really the last step of a weakening labor market, and that could just still be to come. And you want to stimulate demand before you get to that point.
How are you and your colleagues factoring in the potential of huge tariff barriers between the two countries, the big ones that Donald Trump has talked about, and almost certainly a reply from Canada?
Right, right. It is a really hard thing to put into a forecast, really hard thing for the Bank of Canada to know how to react to. I am not expecting that we're going to see, large, tariffs on, versus US and Canada. If there are tariffs, I would think there would be a lot of carve-outs. I would think that they would be short-lived. And I don't think the Bank of Canada is going to be, reacting to tariff policy in itself just yet. But of course, it does create a lot of uncertainty that could weigh on business investment, hiring intentions. So that's just a further headwind to an already softening economy.
If you were able to ask the governor of the Bank of Canada a question, Tiff Macklem, at tomorrow's event, what would that question be?
I would want to ask him, what chance does the Bank of Canada see that they don't need to just take rates to a neutral level, rates no longer need to be restrictive, but what chance do you see that rates might need to be accommodative for a period? Is that something that is on the Bank of Canada's mind that they're potentially looking for next year?